Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our fundamental analysis video. So let's begin, as always, with the fiscal and monetary policies. On the fiscal front, we had a huge disappointment from the Congress because it failed to pass that $2 trillion worth of big bazooka. The bickering continues between Democrats and Republican. They both are blaming each other, but the end result is we haven't seen that $2 trillion worth of fiscal package, which the market needs it badly. Because in the absence of that fiscal package, regardless of what the Fed does, it isn't going to be enough to support the market. The turmoil will continue. Now, speaking of the Fed, they took another unprecedented move and announced unlimited quantitative easing. And what they said is they're going to continue to purchase treasuries and mortgage-backed securities. But the element which really surprised the market was that the Fed also provided the direct support to corporates. What they've done is they announced that they are going to buy commercial mortgage-backed assets and ETFs which have these particular bonds. So bond ETFs, corporate bond ETFs. Now, many dropped their jaws when they really listened to this particular news on the market, when it really hit the tape. But back in the equity market, we saw the positive momentum initially, which pushed all equity markets and commodity markets to the upside. But then it started to fade away. But right towards the end of the market, in the last half an hour, we saw this massive pump coming back into the market for the Dow Jones index, and it recovered literally half of its losses. And it is expected to move to the upside now because investors are still very much optimistic that yes, the Fed is there to support the market, and it is likely that they will get that $2 trillion worth of bazooka out of Congress. Now, back in Europe, the UK for the first time showed its initiative that they are very serious about the lockdown, and the public needs to understand this particular measure. So now, because of this particular measure, market participants are very optimistic, and they believe that it is now that we are going to see the actual lockdown in the market, and that will curtail the outbreak of coronavirus. Because remember, over in China, 100,000 people have recovered from this particular virus, and China is likely to remove the lockdown in Wuhan. So investors are very much positive because of these particular measures, and this is what is pushing the markets higher today in the market action today. In the commodity space, it is all about gold. The derivative is on fire. It moved all the way to 1568, and remember, we talked about that any price below 1500 is a massive buy opportunity, and that is what happened. Now it is highly likely for a gold price to touch 1600, or perhaps even continue to move to the upside. In fact, remember, we have said previously that as long as the loose monetary policy remains in place, and under the current circumstances, it appears it is unlimited QE. The path of least resistance for the gold price remains skewed to the upside. That's all for today. Stay safe, stay clean, and see you guys tomorrow.